Today we have a good, relatively strong bullish reaction, and this could save the market from a sharper correction. Of course, we still have some inflection points to watch out for, so let's talk about strategies. Let's see what the market is doing right now and what you can do with the technical evidence we have at our disposal. This is the Finance Hydra channel where you get analysis without bias, always with a practical focus on developing trading ideas and strategies that you can apply. Here we trade without guesswork, without stress, and without emotions. Everything we do here is based on technical evidence, charts, statistics, and facts. My name is Nathan. Welcome to another daily study. Now, yes, SPY is making a very nice bullish reaction today. Now, is this reaction enough to convince us that SPY is going to fly, it is going to break new highs, it is going to renew its all-time high, going extremely bullish from here? Well, maybe, but what's the catch over here? It is quite interesting to see the SPY making such bullish reaction because it does reject yesterday's bearish candle. Yesterday we saw a possible sign of a possible top signal right below this resistance level over here, this resistance area, and I did tell you guys about this top signal. It was a possible below the stomach candle pattern, all right? So this pattern wasn't triggered. Today we are breaking yesterday's high, closing above it, so okay. We are rejecting the idea of a possible top signal below this resistance area, which is between the 567, the 565, the 567 was a previous bottom level from November last year, while the 565 was a previous bottom level from October last year over here. So we have a double resistance level on the SPY ETF on the daily chart, and only by breaking and closing above this double resistance level, we could see more technical evidence suggesting that yes, SPY is going to turn bullish from here, possibly to retest its next resistance level, which is around 576, very close to the 21-day EMA, the exponential moving average on the daily chart, which is going to be our next double resistance area. Okay, so for now, we do see technical evidence suggesting that yes, this scenario could easily materialize. However, there is only one problem. Oh, and by the way, before talking about problems, on the weekly chart, we see another very nice bullish reaction last week, a hammer candle pattern, which is a quite reliable candlestick pattern, which does reverse the trend more often than not, and this candle appeared right above this purple trend line over here. So yes, we do see a bullish candle on the weekly chart. We see bullish reactions on the daily chart, while on the 1-hour chart, we see a double bottom chart pattern, which we also identified yesterday's during yesterday's video. All right, so we saw a double bottom chart pattern over here. This double bottom was technically triggered. Now we see the possibility of a higher high, higher low. Yesterday we found a low near the 21-hour EMA, okay, slightly below it, all right, not necessarily a huge problem, but right now we see meaningful bullish reaction above the moving average. So if we see a bottom higher than the previous bottom, followed by a high higher than the previous high, it is going to trigger one of the most interesting, reliable bullish reversal chart structures known in technical analysis, which is a bullish pivot point. Higher high, higher low, because guys, remember, downtrends are made of lower highs, lower lows. We don't see higher highs, higher lows while we are going down, all right? But if we see the SPY making higher highs, higher lows, then we'll see a very nice bullish reversal chart structure in play. And this also reinforces the bullish case that yes, SPY could recover from here. I'm not even saying that SPY is going to truly turn bullish again on the daily chart, okay? Because medium term wise, we are still bearish. We are still below the 21-day EMA. We have yet to see higher highs, higher lows, but we could see a bounce to higher levels, all right? So that's what we are focusing right here, right now. That's what the technical evidence suggests, okay? So we see the very possibility of a bullish rally over here. What's the problem? Because there is one single problem, okay? Although we did a bottom signal last Friday over here, an above the stomach candle pattern, this pattern was officially triggered last Monday. I'm so sorry, this Monday. Right now we see another bullish candle. Okay, very good. But right now, apparently, we have yet to break this double resistance level over here, preferably the 567 key point. This key point is an inflection point that is clearly working as a resistance level for the SPY ETF. On the daily chart, we see that SPY found a top signal, a resistance level over here on March 10, over here again this Monday, and here again today. Okay, so this key point 567 is a very interesting key point for you to work with. If you are bullish on the SPY, okay, if you see the 567 getting, if we see the SPY breaking and closing above the 567 on the daily chart, it will give further confirmation of your bullish case. Okay, so that's the key point. You want to see SPY breaking tomorrow or maybe by Friday, all right? So we see the 567. Now you may ask, okay, Nathan, but what if we see the SPY making another top signal like it did over here yesterday? Okay, then we are going to reject this bullish case for now. If we see SPY triggering this top signal, meaning if we see SPY making a top signal and then in the following day closing below this top signal's low, then all right, we are going to materialize another correction to the next support level, which is around 549.68, or maybe let's say a round number 550s, all right? So that's going to be our next support level if we see SPY triggering a top signal below this resistance level. For now, there is no technical evidence suggesting a top signal, suggesting a bearish reversal on the 1 hour chart, because right now we only see the possibility of a bullish pivot point. But if we make a double top over here and if we see SPY losing the 560s again, then okay, maybe we can work with a bearish scenario over here. But for now, we only see another bullish candle. So SPY is bullish right now, today. Okay, we are going to see more confirmation if a breakout of the 567 materializes. All right, that's the key point you want to watch out for the next few days. Excuse me. Now the QQQ, this one has a very nice inflection point as well, around $483.75. 483.75. Why? Because this key point was a previous support level over here in October last year, right? Right now, it was another support level over here on March 7, and right now, since we lost this key point on March 10, it is clearly acting as a resistance level for the QQQ. Maybe on the 1 hour chart we can see this key point better. Let me make this line over here a little bit clearer. Let's change its color to pink, okay? This thick pink line over here on our chart, all right? Let's take a look at the 1 hour chart, because on the 1 hour chart, we are going to see more clues about a resistance level in this place. See, we saw a resistance level below this pink line over here a few times, and over here again today. So this key point is clearly a major inflection point for the SPY. I'm so sorry, for the QQQ. Now, what it takes for the QQQ to turn really bullish is a breakout of this line. What's more, just like on the SPY ETF, we see a double bottom chart pattern, which was technically triggered yesterday. And then we saw, this Monday, and then we saw a pullback yesterday. A pullback after the breakout of a double bottom is completely normal, expected, and even acceptable. Now, if we see a higher high, higher low, it will just confirm the bullish case over here. So 583 is a very dangerous inflection point for the QQQ. So let's see if we're gonna break it in the next few days or not. If the tech stocks ETF is going to actually turn bullish from here, it is critical to see a breakout, preferably by Friday, all right? Preferably by Friday. So let's see how we are going to behave from here right now that we just reached this inflection point again. And we are making another bullish reaction. Now, Nvidia, this one is quite frustrating because clearly the 21-day EMA is acting as a resistance level for Nvidia. So we gotta see a meaningful breakout of this key point for further confirmation of a bullish case over here, right? Now, if we see Nvidia losing this yellow area over here, then it is going to completely reject any bullish possibility on the medium term at least, all right? And then we'll see if Nvidia will trigger another buy signal in the future or if it is going to trigger another sell signal. But for now, we are between this support area made by this yellow area over here, and we are still below the 21-day EMA, so only a meaningful breakout of any of these key points will bring something new on Nvidia. If you are bullish, you gotta watch out for the 21-day EMA. If you are bearish, you wanna see Nvidia losing this yellow area again, because by losing this yellow area, well, it could easily seek our next support levels like the 104 or maybe even the 100s again. Remember, $100 is a round number, a psychological key point for the market, so that's going to be a very nice technical target to work with if we see Nvidia turning bearish again. However, on the weekly chart, long-term wise, we found a very nice support level above this key point over here, and the last week we saw a very strong piercing line candle pattern, which is a very reliable bullish candle structure as well. Therefore, yes, we also see many technical evidence suggesting that Nvidia could bounce from here, but again, we gotta see a breakout of one of these key points first, okay, which I just told you guys here in today's video, all right? Which, by the way, reminds me, guys, if you are still not a subscriber, consider subscribing, because we are here every single day talking about many stocks, sharing unbiased analysis, okay? My studies are totally unbiased, no personal opinions, right? Because my opinions, they do not matter, okay? All that matters is the technical evidence we see on our screens over here. Therefore, subscribe for more analysis, for more content like this. You clearly like technical analysis, so subscribe and click the like button to support me as well. Your support is always much appreciated. Now, let's get back to our study over here. Tesla performing insanely well, going up 4.68% today. All right, it is making a solid, meaningful bullish reaction on the daily chart. On the 1-hour chart, here we see that the situation is a little bit more complicated, because on the 1-hour chart, we saw a possible double top over here, right? I mean, this double top was technically triggered, but it was after the bearish sentiment already materialized, okay? Tesla was already making higher highs, lower highs, lower lows on the daily chart, while on the 1-hour chart, we saw some stabilization over here, and well, right now, it seems that Tesla wants to react above the 218's support level. The 218 was a previous resistance level before this earnings gap over here, right? And recently it did act as a support level for us on March 11 over here, okay? So classic bottom signal after closing a gap. Classic bullish reaction, okay? Classic. Now, we are reacting above this support level. We are still trying to react. We are still trying to bounce. Tesla looks quite promising. Yes, it does. Just like Nvidia, just like many other high beta stocks we see around in the market. But what's the key point Tesla needs to break in order to fly really, really high? We gotta break the 255, the previous resistance level before this before another monster gap over here. I don't remember why. I think it was because of the elections. Okay, I do not remember. Please correct me if I'm mistaken. But if I commit any mistake over here, but I think it was due to elections. Okay, we saw this gap, fantastic. This gap was a previous resistance level, previous support level. Now it is acting as a resistance level again. Okay, so by breaking the 255, Tesla will trigger another meaningful bullish chart structure, which could take Tesla to much higher levels, all right? Possibly to break the 21-day EMA, the exponential moving average on the daily chart, because right now, if you ask me, Tesla is a little, at least a little, right, oversold in this context. I mean, we saw a drop of 10% over here, 1.6%, more 5%, more 13%, more 10%. So guys, Tesla is right now trying to react above a support level on the daily chart after making a very nice dragonfly doji candle pattern on the weekly chart last week. Another meaningful bullish reversal chart structure. So again, we see technical evidence suggesting that Tesla could bounce from here, maybe to retest the 21 weekly moving average again, okay? But guys, what's the key point? 255. By breaking the 255, we are going to see further confirmation of a bullish case, of a bullish thesis, okay? So let's see if Tesla will break the 255 or not. Either way, guys, either way, we gotta bear in mind that if we see Tesla losing the 218, again, it is going to make another bearish pivot point, okay? Because that's what Tesla has been doing, all right? Lower highs, lower lows. If we see Tesla losing, missing the 218, we could easily seek lower levels like the $200 or maybe even the 182 support level on the weekly chart. So we gotta be very careful over here and always work with a crystal clear trading strategy, okay? And which reminds me, I will be honest and transparent with you and tell you that you can trade with us and follow our trading strategies and learn to trade without stress, fear, or anxiety. Just join our educational project, the 5% project, where our members receive our trading signals in real time and learn in practice how to trade strategically together with a skin in the game community. It is totally free to try. No strings attached. Our focus is on teaching you first, delivering valuable content first, and then you decide if you want to stay with us for real or not. For more information about our educational project, the link to my website is in this video's description, right here in the description below this video, all right? Just take a look over there. I think you are going to like what we have to offer because, yes, we are doing very well. We trade many stocks over there, including Tesla, including Nvidia, and the other stocks we have on our radar. So it is going to be fantastic, all right? Just join us over there. It is free to try, completely free, all right? Now, high beta stocks like Tesla and the Nvidia are supposed to perform well when we see the indices going up. If we see SPY actually materializing a bottom signal over here, breaking its medium-term resistance levels, if we see the QQQ breaking the 483 again, fantastic. Many tech stocks, including Tesla, Nvidia, AMD, Palantir, etc., all these stocks are supposed to perform very well because they're all high beta stocks, okay? And I always tell you guys, it is extremely important for us to control our beta, okay, to control the volatility of our strategies. For instance, when the market is down, what we like to do on our Telegram channel, what we at the 5% project do, we trade low beta stocks, okay? Stocks with low correlation to the indices that can perform very well even regardless of what's going on with the broad market, okay? We see Trump talking about tariffs, etc. Well, that's okay. These stocks are supposed to perform very well. They are not correlated to the market. For instance, we traded Electronic Arts over here. We bought over here near this bottom signal. Now it is going up nicely. Take-Two, another gaming stock performing very well, right? We bought this hammer over here, right? Fantastic hammer above a support level. It is performing very well. If you ask me, it is going to reach our technical target. And of course, guys, these are just a few examples. We do much more than that, okay? So when we see the indices performing ugly, okay, we see SPY going down, we see the QQQ going down, they are not giving us any meaningful bottom signal, but they are dropping too hard, so it feels like it is too late to sell or to short. Well, go with low beta stocks, defensive stocks with lower volatility, with less correlation to the market. That's what we like to do. And then we see the market trying to make bottom signals again after a collapse over here. Then all right, now we can start thinking about buying high beta stocks again. Why? Because the risk reward ratio is optimized in these stocks because they dropped a lot. They are near support levels. And guys, remember, for every single trade we do, we follow a very strict trading strategy, okay? For every single trade we execute together, we set a clear stop loss, and we always know where our target is going to be. So we set targets, we set stop losses, and of course, our losses must be smaller than our gains, okay? Our gains must outweigh our losses every single time. That's how we work with risk management. That's how we use the volatility in our favor. That's how we control the volatility of our portfolio. That's how we like to proceed in this market, okay? So guys, right now, if you ask me, in my humble opinion over here, the market is doing we actually see many technical evidence suggesting a bottom signal on the indices. Okay, so right now, if we see any bounce, many high beta stocks could benefit greatly over here, including Tesla, Nvidia. We see even AMD. AMD right now is breaking the pattern. I'm so sorry, not the pattern, but we see AMD making lower highs, lower lows. Okay, right now, we are breaking the 21-day EMA, okay? We saw a breakout of the moving average before, over here, and over here again, over here as well. So I'm still a little bit skeptical, but it is the first step for a meaningful reversal, okay? It is the first thing AMD has to do in order to technically reverse the bearish sentiment. What's the second and final thing? We gotta see higher highs, higher lows. If we see AMD making a crystal clear bottom signal above a support level, fantastic. Then it is going to show us all it needs to technically reverse and to trigger another buy signal over here. And a buy signal on AMD will be something very new because we do not see any buy signal in a very, very long time over here, right? So yes, AMD could officially reverse the bearish sentiment. And honestly, it is about time because we are near a crystal clear support level on the weekly chart. So if we are going to see a meaningful reversal, now would be the perfect time to do so. We are trying to reverse the trend on the 1 hour chart by making higher highs, higher lows on the short term. Okay, so this is very good. Now, we gotta see higher highs, higher lows on the daily chart again to confirm a bullish case. That's what we need to see on AMD. All right, now Palantir, this one is struggling to break the 21-day EMA, okay, which is acting as a quite reliable resistance level for us. Now, if we see Palantir breaking and closing above this moving average, great, fantastic. The next resistance level will be the 125, which is the all-time high. All right, but for now, we have yet to see a breakout, just like the SPY still needs to break this resistance level. QQQ still needs to break this resistance level, just like Nvidia still needs to break the 21-day EMA, like Tesla needs to break the 255. So see, we have many inflection points we can work with on the market right here, right now. It all depends on how these stocks are going to behave from here, okay? And now, Microstrategy this one triggered a buy signal for us over here, okay? The members of the 5% project bought over here just when we triggered this bottom signal, this bullish harami above a support level. It is performing very well, going up 7% just today. Our technical target is above the current price, around $320. Okay, it is one of the few high beta stocks I recommended to you recently. We focused more on low beta stocks, but I saw a very nice bottom signal, and we did identify the possibility of a bottom signal on the indices a few days ago, last week. I'm so sorry. So that's why I did recommend Microstrategy for you guys, but now it is performing very well. Hardly we are going to lose money on this, even if we see another collapse. Hardly we are going to lose money, but if you ask me, we are heading towards the next resistance level, and then we'll see. Why is this key point so important? Because if we see MicroStrategy breaking $320, we are going to trigger a double bottom chart pattern, suggesting more upside for it. Maybe to retest the 400s again, all right, our next resistance area. So that's going to be quite a promising signal, but for now, let's pay attention to this resistance level and, of course, to the 21-day EMA, which is holding its price right here, right now, today, all right? It is still performing very well. Let's see if it is going to keep going up nicely as planned, okay? And, oh, guys, by the way, before I forget, places for the new edition of the Finance Hydra Mentorship Program will open this Friday, and I will analyze your investments. I will help you designing trading strategies exclusively for you, and you will have access to my personal number. You have my personal support. Together, you and I will work to optimize your investments. There will be only a few places, okay? As I still have a few clients from the previous mentorship program, and I can't even take too many people over here, well, given the level of attention I pay to my clients. It will probably be the first and the only mentorship this year. Okay, this year. Therefore, for more information, take a look at my website. The link is also in this video's description, okay? Right here below, in the description, you have everything you need to know about our mentoring program, about the 5% project, so just take a look over there. I think this could be the beginning of a very nice relationship between you and I, all right? So it is going to be great. Now, let's continue our analysis. Sofi, guys, Sofi is making a very nice, solid bullish reaction, okay? We are breaking the 12.24, the previous support level, resistance level over here. Now, we are almost at the 21-day EMA, which is a very nice resistance level, and that is also very close to the $13 again, okay? So, guys, this double resistance level over here is critical for Sofi, because only if we see Sofi breaking this key point, we are going to re-enter bullish territory again. Re-enter bullish territory. Okay, so guys, this is the inflection point. You want to see Sofi breaking? Now, Nathan, I am bearish on Sofi. All right, I want to see Sofi dropping. What's the key point I should watch over here? Well, $12.24. If we see Sofi closing below $12.24, well, it is going to possibly reject today's bullish candle, suggesting that today's reaction is just a possible bullish exhaustion bar, reaching or getting very close to a double resistance level, and that would be very frustrating for the bulls over here, okay? So that's the key point. You want to see Sofi losing if you are bearish. If you are bullish, $13 resistance level near the 21-day EMA. That's the key point. You want to see Sofi breaking, then and only then Sofi could reach higher levels like the 14.74 or maybe even the 17s again, all right? So let's pay attention on how these stocks are going to play from here. Of course, again, I will be here every single day to keep you guys updated on these stocks and much more. Unbiased analysis, focusing on trading strategies that you can apply in practice in your life. So subscribe, click the like button, take a look at my website, links in the video's description. Thank you for your audience, my dear friends. Stay safe. See you guys tomorrow.